If I told you that that so-called one-time fee loan could secretly be costing you over 100% APR, would you believe me? Because that's exactly what I'm about to show you, using a real Stripe Capital offer that one of our clients was just sent. And business owners across the world are accepting these every single day without realizing the true cost. So let's break this down so that you don't get caught off guard by this. Okay, so here we are. On the right-hand side, you can see the email from Stripe, and maybe if you're a business owner, you might have received the same sort of email letting you know that, hey, you qualify for a X amount of dollar loan, and to let you know it's only a one-time flat fee, so you don't have to worry about compounding interest and all this other stuff. But don't get caught off guard because there's two things you need to look at. One is the cost of repayment, right? So in this case, if you get a loan of 2000, this individual would have to pay back $2,290. But the second piece is what is the repayment rate? So in this case, they are going to be required to pay 21.2% of each sale to the repayment of that loan. So what does that mean in terms of the business owner and APR and potential interest rate? So let's break it down depending on your weekly sales in your business that you run through Stripe. So in this case, if you ran a weekly sales of $500 through Stripe, you would have a weekly repayment of $106, and it would take you about 21, 22 weeks to repay that loan back to Stripe. So a little under half a year. In this case, if that was the case, your interest rate would be about 35% on the money. But you also have to take into account that for nearly 22 weeks, you would only be operating on about $394 of your typically $500 of revenue that you had coming in, minus any fees associated with this with your account. Because again, this is just assuming net of fees. But if you had fees that also associated with it, you'd be operating on even less. And so if you're struggling right now and you needed that $2,000 loan, there's a couple things you had to take into consideration. Why are you in that spot? Or do you need is the $2,000 that you're going to be able to spend right now going to give you an ROI immediately? Now, let's say you're a more active in Stripe and you have more weekly sales than 500. And how does that impact your APR? So what you can see here is that even though you double your weekly sales, it doesn't help the interest rate. It actually makes the APR go skyrocket. So if you run $1,000 a week through Stripe, your weekly payment is $212, which is again still 21.2% of your sales, and it's going to take you about 11 weeks to repay that loan. You'd think, oh great, I'm out of the loan even quicker. But your actually effective interest rate, your effective APR in that loan now becomes nearly 70%, right? And in this case, you have to operate on about $788 when you've been used to operating on 1,000. And it gets even worse when you look at a $2,000 of weekly sales. You're paying back $424 a week. You're like, oh, it's going to help me. I'm going to get this paid off in a little over a month. Great. But your APR for that loan is 140%. So if somebody said to you, hey, I am going to give you an interest, I'm going to give you a loan and it's going to be 140%, would you take it? This is something that you need to consider when you're taking these one-time fee loans is that yes, it may look like it's a little over 10% of your money, but in reality, depending on how long it takes you to repay, it's actually the effective interest rate that you're paying on the money that you're getting. Then the next thing you have to do is pay attention to what is your actual net weekly cash flow in your business. And if you can't operate on that, you can't take that loan because it's just going to put you in a more difficult place in your business than if you were to just try and figure something out, maybe renegotiate a contract or renegotiate some expenses or cut something temporarily. So before you fall into the trap of looking at an email and seeing it as easy money and quick money so that you can maybe take care of something that's been stressing you, that's an expense that you need to get caught up on, you need to understand the full picture. You need to understand what it's going to do to your future cash flow and are you going to be in a better or a worse spot by taking this loan or this advance? So if you have any questions about this, feel free to let me know. We're here. We share these videos to give you guys insights as business owners so that you can make the best decisions that you need for your business and have all the information available to you to make those decisions. If you'd like support in making these steps easier and more effective, that's exactly what we do at Triumph Business Solutions.
So let's connect and see how we might be able to put profit first and a better financial system to work in your business. And if you like this video, make sure to follow one of these videos that YouTube thinks you'll like next. Until then, see you in the next one.